Good afternoon to you. Let's take a look at the markets. Asian markets plunged today after US President Donald Trump imposed hefty reciprocal tariffs on over 180 countries and territories, several of which are in the region. The Nikkei share average declined by 2.8%. The Hang Seng Index fell by 1.52%, while the Shanghai Composite Index ended the session down 0.24%. Over in the United States, US markets ended yesterday's session higher across the board. They were driven by strong performances from Tesla and Amazon. Tesla rose by 5.3% after reports revealing that President Trump has signaled that Elon Musk was set to reduce his role as a government advisor, serving to alleviate concerns about his perceived conflicts of interest. But the markets closed before President Trump made the announcement on the sweeping reciprocal tariffs against all the US's trading partners around the world. The Dow Jones Industrial Average rose by 0.6%, the S&P 500 gained 0.7%, while the Nasdaq Composite Index climbed 0.9%. Coming to our local indicators, we see that the local market has been decimated today. Currently, we see that the all-share index is down 4% at 85,367 points. The rand also not doing very well at the moment, trading at 18.84 against the US dollar, 20.85 vis-a-vis the euro, and trading at 24.81 against the British pound, nearly touching 25 against the British pound. In terms of commodities, we see that gold is trading at $3,103 an ounce. It's come down a little bit. Platinum at $963 an ounce, while Brent crude oil is trading at $71.56 a barrel. Well, to unpack the markets for us, we do have with us Lindile Malgas. He is an investment strategist at ABSA Investments, and Fahima Adia. She is an equity specialist at Momentum Security. So we're going to get into conversation with them. Thank you so much, both of you, for joining us. So Fahima, it's interesting that Mr. Trump elected to deliver his tariff announcements after the US markets had closed. And while they closed in positive territory, US futures suggest that US markets will open in negative territory.
Afternoon, Nampu. Thanks for having me. Yes, so it was interesting that he chose to make that announcement afterwards, but nevertheless, the markets really did not like it. It actually came in a lot worse than what investors were expecting, and therefore we saw quite a sharp sell-off in US futures after hours. And of course, that's had a knock-on effect on other markets that we're seeing today. The JSE down sharply, also seeing weaker performance from Asian markets, European markets. So it seems all markets globally have been impacted, unfortunately.
Yeah. So, of course, this is going to really hit markets right across the board. Lindile, I wanted us to focus on the Asian markets. I mean, they've plummeted quite a bit on the tariff news, as many of the countries in that region are key exporters of a number of goods, with the likes of vehicles also being targeted.
Yes, so we did see quite a big sell-off within the Asian equities, but that's been the case throughout the week. So they're down over the week so far. And as you mentioned, they are quite a key exporter, particularly for automakers. So you're looking at regions such as Japan. That has been one of the biggest losers so far in terms of equity performance. And then also seeing some of the countries that had pledged to invest within the US. So from a Taiwan perspective, we have seen Trump also imposing tariffs on them. So we're also seeing those indices down over the week so far as well.
Yeah. So Fahima, in terms of South Africa specifically, the general import tariff being levied on us is 30%, with motor vehicles attracting a 25% import duty. But also President Trump talked about a baseline of 10%. So have you had time to interpret what that actually means? Does that mean that we're going to be we're going to have 40% tariffs imposed on us, or is 10% just the basic, and specifically for South Africa, we're going to be levied 30%? What's your understanding, and what are the implications for South Africa? Have you seen any counters or sectors affected by this?
So I'd say the sector that has really been impacted today looks like it's the financials. That's been down quite significantly. And it's because, it's the banks that suffer the most when there are issues related to the economy or any headwinds. And I think that's why we're seeing weakness in the financials today. In terms of the tariffs that's been specifically imposed on South Africa, he did say that it would be 10% as that broad baseline figure, but for countries that have tariffs on the US, there would be higher reciprocal tariffs. And that's why South Africa is facing a 30% tariff. So it seems that would not be, over and above the 10%. It would just be 30%. And the reason he's given for that is because apparently South Africa has a tariff of 60% on US goods. But I believe that number is actually not correct. I'm not sure how he got to that number. It's actually closer to the likes of 7%. But he's also accused South Africa of blocking imports of pork and poultry from the US into South Africa due to things like our anti-dumping tariffs and so forth. But yes, I mean, this isn't great for South Africa. It will take a toll on South African industries, given that the US is the second largest trading partner after China. And our auto sector in particular has really benefited from that agreement we have with AGOA. So it looks like the export of vehicles now to the US will no longer get that preferential AGOA treatment. So the motor industry will be hit there. And overall, it's just expected to have quite a dampening effect on South Africa's economic growth, given that we really do need to see growth now. And of course, this just really doesn't help with that situation.
Yeah, look, it's a very scary picture that you're painting. I mean, Lindile, let's continue with this conversation around the tariffs. It's not only sort of the auto sector that we need to worry about. If we look at the agricultural sector, it's a huge beneficiary from AGOA, having access to AGOA. But over and above AGOA, we do generally export to the United States anyway. But ultimately, if we're going to see high inflation and a lack of price competitiveness, this could hit the bottom line and ultimately jobs in South Africa, right?
Yes, so definitely think that the impact will be negative from an agricultural point of view. As we've seen in some of the past GDP prints, the agricultural growth has been quite volatile, and a lot of that owing to some conditions. And then if you're looking at it from an inflation perspective, food inflation has been relatively contained. But however, if you start seeing some of those tariffs, and if some of those exporters are unable to redirect some of those goods to other key markets where they may be competitors as a result of the US tariffs, you may ultimately see impacting companies' bottom lines, particularly from a retailer and consumer staples point of view, where they may not be able to pass on some of those price increases as effectively to consumers.
Fahima, following the budget vote yesterday, it's clear that not all is well with the DA in the GNU. If that's the case, are we likely to see that the market will unravel, as an analyst has said previously that part of the reason South Africa was doing so well and was resilient in terms of the markets and the rand was because of the GNU. Do we see an exit of the DA from the GNU being the unraveling of markets? But of course, that's very difficult for you to say right now because there are also exogenous factors which are impacting on our markets right now.
Yes, it's a tough one, but it is definitely a possibility after we saw yesterday that the DA voted against that budget. So it is up in the air right now whether they will continue to be part of the GNU going forward and what the case will be. So I think it's already taking a toll on our markets and on the rand. We already saw the rand start depreciating yesterday, and obviously it's gotten a lot weaker today. So not only are our markets now being impacted by global factors related to the reciprocal tariffs, but our at-home local factors are also a major issue right now.
Yeah. Lindile, just explain to the viewer why we don't want to see 19 rand to the dollar, what impact it's going to have for households if this is sustained, for the next little while. What does it mean? And ultimately, I will pose this question to Fahima afterwards. Does this mean now that we can kiss goodbye any further interest rate cuts and that going forward, it's likely to be interest rate increases?
Yes, so I think the most easiest way to assess that impact of a weaker rand is if we see the rand weakening, and as a result, it filters into oil prices and petrol prices as well. and that does serve as an input cost into the majority of industries. And as a result, you can see a bit of higher or resurgence in inflation from that point of view. And if we do sort of see inflation not being able to be contained within the SABC target range, it may lead to higher interest rate increases or interest rates remaining elevated for longer. And as a result, that may impact some of the consumers' disposable income. And also, if you're thinking now with the recent budget, with the talks of around a VAT increase, that may further hurt our consumers' wallet as a result of those factors as well.
Yeah. Fahima, let's end with you. Your view on what the interest rate trajectory will be.
I agree with what Lindile has said. It's pretty much the same, that if we do see the rand depreciate further due to all of these headwinds that we're seeing now, it could really just impact us because the cost of imports would increase, and then that would put pressure on the inflation rates, and then the Reserve Bank may have to keep rates steady. I think it will be very difficult for them to increase rates in this type of an environment, given that the consumer and businesses are already under so much pressure. It will be a very difficult balancing act. We've also had, weak economic growth for many years now. So if you do go now and increase interest rates when the economy is already struggling and the consumer is under pressure, it could just, result in less growth, which is also something we don't want to see. So it will be a very difficult balancing act for the Reserve Bank.
Yeah, thank you to both of you for your time and your insights. That was Fahima Adia. She's a senior equity analyst at Momentum Securities, and Lindile Malgas. He's an investment strategist at ABSA Investments. We so desperately want to be able to give South Africans good news on the economy, but unfortunately, it's not looking good at the moment.